Learners, welcome to our session today. I am your instructor, 𝗕𝗂𝗃𝗃. So it's a continuation of what you are doing earlier on. Recall in the previous class, which we termed it as a master class, we had looked at the concept of steps in solving transfer problem, questions, or problems. So in our class today, I want us to handle one of such problems. And in this case, you're going to handle a question from our past paper, which this question ideally is going to widen our mind wide to enable us to understand what we did in our last class regarding the steps that we should always consider anytime we are handling transfer pricing problems. So this question is going to come from our past paper, and that should be a question in, let me share the question here with us. May 17, question number 5, part B. There's a question from May 17, question number 5, part B. May 17, question number 5B. So we are talking of May 17, question number 5, part B. May 17, question number 5, part B. May 2017, question number 5, part B. So let's go through that question. I've shared the question in our screen. This is what we are told that 𝗕𝗂𝗃𝗃 Limited has two manufacturing divisions, namely A and B. Division A manufactures a single product branded RR. So I'm having two divisions, A and B. Division A manufactures a single product branded RR. 2/3 of the output of RR is sold externally, while the balance is transferred to Division B, where it is used as a raw material in the manufacture of a product branded TT. Read that statement again. 2/3 of the output of RR is sold externally, where the balance is transferred to Division B, where it is used as a raw material in the manufacture of a product TT. So clearly, by looking at that statement already, you can identify that we have two divisions. We have two division A, we have in division B, where the supplying division, you can clearly see it was A, whereas the receiving division, you can clearly see it was B. So I'm having two divisions separate. Then we know very well the concept of transfer price. I'll always be considering what? The receiving division, which is Division B. The unit cost of product RR are as follows. The unit cost I'm given direct material, direct labor, direct expenses, variable manufacturing overhead, fixed manufacturing overhead, selling and packaging expense. I'm giving it to be a variable cost. Additional information. We are told that number 1, annually 10,000 units of product RR are sold externally at the standard price of 90 shillings per unit, while 5,000 units are transferred to Division B at an internal transfer charge of 87 per unit. So we can clearly identify our transfer pricing at this point. It was how much? 87 shillings per unit. Note number 2, the selling and packaging expense is not incurred for internal transfers. So anytime I'm looking at department, the selling division, which in this case is department A, if I was to consider the variable cost that I'm going to transfer to Division B, in that case, we know very well, and we've been told there that we are not going to take what? Selling and packaging expense. Recall the steps that ideally should affect us in step number 3, whereby I need to transfer the variable cost of the supplying division to the purchasing division. Note number 3, the unit cost of product TT are as follows. And we've clearly seen product TT was being produced by which division? Division B. Transferred in item RR 87, added direct material 69, direct labor 9, variable overhead 36, fixed overhead 36. Selling and packaging expense variable, I'm given 3. So in that case, that was for the receiving division. That was for the receiving division. Then come and talk about number 4. Note 4, we are told a recent study of the demand and sales relationship of the company's product by the sales division produced the following results. A recent study of the demand and sales relationship of the company's product by the sales division produced the following results. I'm having division A, where we had our selling price and demand units. We have division B, where we have our selling price and demand units. Note 5, so I'm given our demand level and our selling prices at different levels. Note 5, we are told the manager of division B has proposed that transfers from division A should be made at 36 shillings per unit, which represents the variable cost plus a minimum markup. The manager of division B has proposed that transfers from division A should be made at 36 shillings unit, which represents the variable costs plus a minimum markup. So there's a proposal of us charging 36 to be a transfer price instead of the initial amount of 87. Advice. Required. Advise the management of 𝗕𝗂𝗶𝗰𝗹 Limited on the following. The current effect of the transfer pricing system on the company's profits. The effect on profit of adopting the above proposal from the manager of division B. So, given such a question, where are we going to start from? So I'm allowing you to take a screenshot, please. For those who can access, that is May 2017 question number 5B, MA, Advanced Management Accounting, CASNEB CPA paper. For those who can't, kindly take a screenshot. I'm scrolling it down for you guys. So that is a question, my good student. That is a question given. That is a question given. So following our steps, the first step, identify the purchasing or receiving division, which in this case is what? Division B. The next step, determine the contribution under each forecasted or proposed demand level or selling price without considering the transfer price. So therefore, that should take us to solution to this. We've already identified the receiving division. Consider the second step. We need to have our contribution statement. And in our contribution statement, my good students, we know very well that for us to determine our contribution, actually you can have it, for those probably who didn't attend this class, contribution. We should be talking of CMQ. And CM, we are talking of our selling price per unit minus our variable cost per unit. So selling price you are given at different levels. Consider our variable cost. Remember, we are looking at this point, we want to determine contribution without transfer price. Contribution without transfer price. That is what you want to consider. And for us to have our contribution, you're talking of CMQ. CM, selling price minus variable cost. So what will be our variable cost here if we are to talk of without transfer price? This is what you are going to do. We are going to analyze first of all the variable cost under the receiving division, which I believe you have your paper. Still, I can share it here with us again. Go to note number 3. The unit cost of productivity are as follows. Ignore transfer price, first of all, 37. Take all the other variable cost. Take all the other variable cost, which in this case, the other variable cost, you can clearly see I'm having direct materials, 69. We add direct labor, 9. We add variable overheads, 36. We add selling and packaging expense, I'm having 3. We add. Probably a person will ask Mwalimu, if we look at note 2, is telling us that the selling and packaging expense is not incurred for internal transfers. That now will affect us when we are dealing with, when you want to transfer the variable cost. When you want to transfer the variable cost to the receiving division, So, this should give us a variable cost incurred by the receiving division. Then you are going to add the variable cost that was incurred by the supplying division. Remember our steps and the illustration that I gave earlier on. So in this case, we consider the variable costs incurred by the supplying division, which we had what? We had direct materials, which was 12. So this is supplying variable cost transferred. Variable cost transferred from the supplying division. Variable cost transferred from the supplying division, we have it as 12 plus 6 plus 6 plus 6. Because, recall, this is what we are told, that, note 2, the selling and packaging expense is not incurred for internal transfers. So therefore, I'm not going to take, that is where that concept will come in. We are not going to take the selling and packaging expense under when you are transferring our variable cost. So therefore, this should give us a variable cost of how much? That should give us a variable cost of how much? I should be talking of 69 plus 9 plus 36 plus 3. We add 12 plus 6 plus 6 plus 6 to give us 147. So therefore here I'm having 147 because we have 30 and we have 117 to give us a total of 147. So this should be our variable cost without considering transfer price. The moment we do have that case, you can now proceed and determine our contribution for each proposed demand level. So that should take us to our contribution statement. So look at our contribution statement here. Contribution statement. I need CM. In CM, we are talking of selling price minus variable cost. So come and identify first of all here our selling price. Selling price we are given at different levels, right? We are given selling price at different levels. We are given our selling price at different levels. We're given our selling price at different levels. So looking at our selling price here, identify for me. And where will you get that one? Let me share the question here. Here is what we have the data. Go to note number 4. Note number 4, consider division B. Because our area of concentration, we've said our focus will be on the receiving division. So selling price I'm having there, and I'm also given our demand units. So that is what we'll be taking. So therefore we can agree and say that here we were given a figure of selling price 240, the first one, 270, the second one, and 300, third one, right? Variable cost. We've seen our variable cost here. We've seen it to be 147. 147 and 147. So therefore, what will be our contribution margin for each? So my contribution margin at demand level of 7,200, at demand level of 5,000, at demand level of 2,800. These were our demand levels, right? So my contribution margin, what will you be having? CM, selling price minus variable cost. So we are going to take our 240 minus 147 to give us 93. 270 minus 147 to give us 123. 300 minus 147 to give us 153. We incorporate our quantity. 7,200, 5,000, and 2,800. The data that was given. So this should give us our contribution of, so talk of our contribution here. The first one, we can agree, we have 97,200 times 93, that should give us 669, 600, 5,000 minus times 123, 615,000. 153 times 2,800, 428,400. So we can clearly see here that our maximum contribution is at demand level of 7,200, and my maximum contribution is 669,600. So that is step number 2. We identify the contribution without transfer price, and we identify the maximum contribution under that contribution statement, which we have determined it to be at that point. Step number 2, contribution with transfer pricing. 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 So, talk of contribution with transfer pricing. Contribution with transfer pricing. So this is an area that we should be very good at. This is an area that we should be very good at. I want to determine our new variable cost. So my variable cost with transfer pricing, I'm having a total of 117 here. We add transfer price. According to our question, transfer price, I was given a figure of how much? 80. Look at that question. Transfer price, let me just check it out. Note number 1. Annually, 10,000 units of product RR are sold internally, externally, at the standard price of 90 per unit, while 5,000 units are transferred to Division B at an internal price charge of 87 per unit. So therefore, what will we be having? I'm having transfer price of 87. So therefore, talk of plus 87. That should give us how much? That should give us 117 plus 87 to give us a figure of 204. To give us a figure of 204. So therefore, proceed and prepare our contribution statement. So we need to come and prepare our contribution statement. So therefore my contribution statement here, contribution statement, what will you be having? The same selling price will not change. So therefore I'm going to consider at the same demand level at 7,200, at 5,000, and at 2,800. Selling price will not change to 40, to 70, and 300. But our variable cost, my good student, will do what? Will change. Variable cost, our new variable cost with transfer price I'm having 204. So we have 204, 204, 204. Variable cost. So what will be our contribution margin? My contribution margin, the first case we should be talking of, that should be 240 minus 204 to give us 36. 270 minus 204 to give us 66. 300 minus 204 to give us 96. We have our quantity: 7,200, 5,000, 2,800. Factor in our quantity to our contribution, we multiply our quantity by contribution margin. 7,200 by 36, 7,200 by 36. This should give us 259,200. 66 by 5,000. That should give us 330,000. 2,800 by 96. That should give us 268,800. So that is what we should be having, right? Then the moment you are there, we need to do what? To identify the maximum contribution. So talk of maximum contribution. For maximum contribution, I can clearly see we are looking at how many units? At 5,000 and revenue of 330,000. Correct? After we've done like that, remember our main idea, or rather our main agenda here, is to determine the effect of the transfer price to the company's profit. And that should take us to step number 4 in advising the company. So to advise the company based on what? To advise the company based on the profits. This is a question where we were asked. The current effect of the transfer, advise the management of 𝗕𝗏𝗃 Limited on the following. The current effect of the transfer pricing system on the company's profit, on the company's profit. So having that case, this is what we have. The effect will be, with transfer price, what will be our total contribution? Total contribution with transfer price. Total contribution with transfer price, this is what we'll be having. Division B is generating a maximum of 330,000. Right? The maximum contribution that we've seen is 330,000. And what is A getting from division B? what is A getting from division B. So division A is getting how much from division B? The internal transfers. The internal transfers. Transfer pricing was 87, right? So I'm having 87 here. Variable cost that A incurred. We had already determined it here. Variable cost transferred was 30. And how many units are we transferring to division B to maximize this contribution? The units that will maximize our contribution is 5,000 units. So by 5,000 units. These are the units that will maximize our contribution. So therefore we should be having a figure of how much? I should be talking of 87 minus 30 times 5,000, right? I'm getting a figure of 285,000. So you're getting a figure of 285,000. So the total, therefore, we should be talking of 615,000. With transfer pricing, the total contribution that we do have, I'm having 615,000. The total contribution that we do have with transfer pricing is 615,000. Without transfer pricing, the maximum contribution that you are getting, we had 669,600. So what will be the effect of this transfer pricing to our profit? Effect of transfer pricing to our profit. How will it affect our profit? Without was 669,600. With is 615,000. So we can clearly see that my profit is doing what? My profit is reducing. And it will lead to a reduction of profit of how much? It's going to lead to reduction of our profit by 54,600. So my profit will reduce by 54,600. My profit will reduce by 54,600. And that is what you are required to do in part 1 of that question. We were supposed to look at the effect of our profit to what? The effect of our profit in our transfer pricing, right? And that is what we should, that is what you're supposed to do. So I'm having 54,600. So we are done with part 1 of the question. Part 2 of the question, my good students, what are we required to do in part 2? Again, I'm going to share that question. We see what you are required to do in part 2. Here comes part 2. We were told that the effect on profit of adopting the above proposal from the manager of Division B. Go to note 5. Note 5, the manager of Division B has proposed that transfers from Division A should be made at 36 per unit, which represents the variable cost plus a minimum markup. The manager of Division B has proposed that transfers from Division A should be made at 36 unit, which represents the variable cost plus a minimum markup. Plus a minimum markup. Plus a minimum markup. So, new transfer price that has been suggested. So you want to look at the effect of this. New transfer price, the suggestion was to be 36. New transfer price, new transfer price. This is a new suggestion. New transfer price should be 36,000. So the same concept will apply. We want to see this impact to our profit. We want to see this impact to our profit. And how will you work it out? Again, I need to determine therefore my variable cost with this new transfer pricing. Our variable cost with the new transfer pricing, I'll be having the 117, which did not change. but this time round I'm going to add 36, being our new transfer price, right? So therefore my variable cost, we should be talking of 117 plus 36 to give us 117 plus 36, that should give us 153. So my new variable cost at transfer price of that, I should be having 153. Okay? The same concept applies. Come and prepare your contribution statement. Come and prepare your contribution statement. So our contribution statement here, contribution statement. Prepare our contribution statement here. Prepare our contribution statement. Prepare our contribution statement. So looking at our contribution statement, this is what we should be having. I'm having the same concept, considering at 7,200, at 5,000, and at 2,800. These are different demand level that we had. Different demand level that we had. So having that one, come and work out our selling price. 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 Just a moment. So come and work out our selling price. The same case will happen. My selling price will not change. I'm having 240, 270, and 300. But this time round, my good student, our variable cost is how much? 153. Variable cost, 153, 153, and 153. So what will be our contribution margin? What will be our contribution margin? So my contribution margin, the first case we should be having, being our contribution margin here, we should be talking of 240 minus 153 to give us 87. 270 minus 153 to give us 117. And 300 minus 153 to give us 147. We have our contribution margin. We have our contribution margin. So the moment we do have our contribution margin, it will be upon us now to do what? To come and determine our contribution by putting into consideration our quantities. 5,000 and 2,800. So therefore, my contribution here, we should be having 87 by 7,200, 626,400, 117 by 5,000, 585,000, 147 by 2,800, 411,600. So our maximum contribution here should be our maximum contribution. Maximum contribution. We can clearly see I'm having at 7,200, and we do have 626,400. So what will be our total contribution? Therefore, my total contribution, we should be having the following. We should have division B, contribution with transfer pricing. With our new transfer pricing, I'm having 626,400. This is division B. And what will division A get from division B? division A, what will it get from division B? Transfer price is 36. That is what you're going to charge that division. Variable costs that we're incurring, will they change? They will not change. So I'm going to take the same 30. This time round, we are considering how many units will maximize our contribution? 7,200. So therefore, I require 7,200 from our division A, 7,200. So that should give us how much? So by 7,200, so to be clear, this is 626,400 by 7,200. So I'm having 36 minus 30, 7,200. So I'm having 43,200. Right? So total, we should be having 626,400 to give us a total contribution of 669,600. 669,600. 669,600. 669,600. So in that case, we compare with what we had. So we compare with what we had here. So with the transfer price of 36, my total contribution, the total contribution that's going to be generated from Department B is 669,600. Without transfer pricing, our total contribution was 669,600. So you can clearly see that if we adopt 36 as our transfer price, you will find that my profit will not be affected because I'll be taking with transfer pricing 669,600 with transfer pricing 669,600. So the impact will be, I won't be having any impact. I won't be having any impact if we adopt a selling price of 36. If we adopt a selling price of 36. So my good students, that is what we are required to do in that question. And as you have clearly seen, we followed the exact steps that we gave in our previous video. So that in our next class, I want us to meet and handle another question for transfer pricing, so that it should open our mind very wide. So to this juncture, thank you so much, and let us meet in the next session. Thank you.